Chapter 23 Documentation in the Insurance Industry. We deal with a large number of forms, documents etc. This chapter takes us through the various documents and their importance in an insurance contract. It also gives an insight to the exact nature of each form, how to fill it and the reasons for calling specific information. After studying this chapter, you should be able to Ilunga explain the contents of proposal form, K explain the premium receipt, L appreciate and explain cover notice and certificate of insurance, M explain terms and wordings in insurance policy document, N interpret the policy warranties. Insurance documentation is provided for the purpose of bringing understanding and clarity between insured and insurer. There are certain documents that are conventionally used in the insurance business. The insurance agent, being the person closest to the customer, has to face the customer and clarify all doubts about the documents involved and help her in filling them up. The insurance company comes to know the customer and their insurance needs only from the documents that are submitted by customer. They help the insurer to understand the risk better. Agents should understand the purpose of each document involved and the importance and relevance of information contained in the documents used in insurance. 1. Proposal forms. The first stage of documentation is essentially the proposal forms through which the insured informs who she is, what kind of insurance she needs, details of what she wants to insure, and for what period of time. Details would mean the monetary value of and all material facts connected with the subject matter of insurance. Risk assessment by insurer. Proposal form is to be filled in by the proposer for insurance, for furnishing all material information required by the insurer in respect of a risk, in order to enable the insurer to decide whether to accept or decline, and in the event of acceptance of the risk, to determine the rates, terms and conditions of a cover to be granted. Proposal form contains information which are useful for the insurance company to accept the risk offered for insurance, the principle of utmost good faith and the duty of disclosure of material information. Begin with the proposal form for insurance. The duty of disclosure of material information arises prior to the inception of the policy, and continues even after the conclusion of the contract. This principle has been discussed in Chapter 2 in detail. If the insured was required to maintain an alarm or had stated that has an automatic alarm system in his gold jewelry showroom, then not only is he required to disclose it, he has to ensure the same remain in a working condition throughout the policy period. The existence of the alarm is a material fact for the insurer, who will be accepting the proposal based on these facts and pricing the risk accordingly. Proposal forms are printed by insurers usually with the insurance company's name, logo, address and the class, type of insurance, product that it is used for. It is customary for insurance companies to add a printed note in the proposal form, though there is no standard format or practice in this regard. Some examples of such notes are non-disclosure of facts material to the assessment of the risk, providing misleading information, fraud or non-cooperation by the insured will nullify the cover under the policy issued. The company will not be on risk until the proposal has been accepted by the company and full premium paid. Material facts. These are important, essential and relevant information for underwriting of the risk to be covered by the insurer. In other words, these are facts connected with the subject matter of insurance which may influence an insurer's decision in the following: 1. Accepting or not accepting a risk for insurance, fixing the amount of premium to be charged, and including special provisions in the contract about the conditions under which the risk would be covered and how a loss would be payable. Declaration in the proposal form. Insurance companies usually add a declaration at the end of the proposal form to be signed by the insurer. This ensures that the insured has filled up the form accurately and understood the facts given therein, so that at the time of a claim there is no scope for disagreements on account of misrepresentation of facts. This serves the main principle of utmost good faith on the part of the insured. Examples of such declarations are: we hereby declare and warrant that the above statements are true and complete in all respects, and that there is no other information which is relevant to the application for insurance that has not been disclosed to you. We agree that this proposal and the declarations shall be the basis of the contract between me, us and insurer's name. The nature of questions in a proposal form. The number and nature of questions in a proposal form vary according to the class of insurance concerned. 1. Fire insurance proposal forms are usually used for relatively simple, standard risks like houses, shops etc. For large industrial risks, inspection of the risk is arranged by insurer before acceptance of the risk. Special questionnaire are sometimes used in addition to the proposal form to gather specific information. Among other things, the description of the property which would include the following information: construction of external walls and roof, number of story, occupation of each portion of the building, presence of hazardous goods, process of manufacture, the sums proposed for insurance, the period of insurance, etc. For motor insurance, questions are asked about the vehicle, its operations, make and carrying capacity, how it is managed by the owner and related insurance history. In personal lines like health, personal accident and travel insurance, proposal forms are designed to get information about the proposer's health, way of life and habits, pre-existing health conditions, medical history, hereditary traits, past insurance experience etc. In other miscellaneous insurances, proposal forms are compulsory and they incorporate a declaration which extends the common law duty of good faith. Elements of a proposal. Proposer's name in full. The proposer should be able to identify herself unambiguously. It is important for the insurer to know with whom the contract has been entered, so that the benefits under the policy would be received only by the insured. Establishing identity is important even in cases where someone else may have acquired an interest in the risk insured, like a mortgage, bank or legal heirs in case of death, and has to make a claim. Proposer's address and contact details. The reasons stated above are applicable for collecting the proposer's address and contact details as well. Proposer's profession, occupation or business in some cases like health and personal accident insurance. The proposer's profession, occupation or business are of importance as they could have a material bearing on the risk. For example, a delivery man of a fast food restaurant, who has to frequently travel on motorbikes at high speed to deliver food to his customers, may be more exposed to accidents than the account of the same restaurant. Details and identity of the subject matter of insurance. The proposer is required to clearly state the subject matter that is proposed for insurance. The proposer is required to state if it is a private car with its identification like engine number, chassis number, registration number, or a residential house with its full address and identification numbers, or an overseas travel, by whom, when, to which country, for what purpose, or a person's health with person's name, address and identification, etc. Depending on the case. Some insured indicates limit of liability of the insurer under the policy and has to be indicated in all proposal forms. In case of property insurance, it is the monetary value of the subject matter proposed for insurance. For health, it could be the cost of hospital treatment, while for personal accident insurance this could be a fixed amount for loss of life, loss of a limb, or loss of sight due to an accident. Previous and present insurance. The proposer is required to inform the details about his previous insurances to the insurer. This is to understand his insurance history. In some markets there are systems by which insurers confidentially share data about the insured. The proposer is also required to state whether any insurer had declined his proposal, imposed special conditions, required an increased premium at renewal or refused to renew or cancelled the policy. Details of current insurance with any other insurer including the names of the insurers are also required to be disclosed, especially in property insurance. There is a chance that insured may take policies from different insurers and when a loss happens, claim from more than one insurer. This information is required to ensure that the principle of contribution is applied so that the insured is indemnified and does not gain profit due to multiple insurance policies for the same risk. Further, in personal accident insurance an insurer would like to restrict the amount of coverage, some insured, depending on the sum insured under other policies taken by the same insured. Look up references to the principles of insurance in the previous chapters and try to connect how indemnity, contribution, utmost good faith, disclosure are practically applied in the design of the proposal form. A sample each of a motor and fire proposal form is given in Annexure A and B. Please study the proposal forms carefully and understand the implications of the contents of the proposal form and their relevance to insurance. The proposer is asked to declare full details of all losses suffered by him, her, whether or not they were insured. This will give give the insurer information about the subject matter of insurance and how the insured has managed the risk in the past. Underwriters can understand the risk better from such answers and decide on conducting risk inspections or collecting further details. V. Declaration by insured. As the purpose of the proposal form is to provide all material information to the insurers. The form includes a declaration by the insured that the answers are true and accurate and agrees that the form shall be the basis of the insurance contract. Any wrong answer will give the right to insurers to avoid the contract. Other sections common to all proposal forms relate to signature, date and in some cases agent's recommendation, EX, where a proposal form is not used. The insurer shall record the information obtained orally or in writing, and confirm it within a period of 15 days thereof. The proposer and incorporate the information in its cover note or policy. The onus of proof shall rest with the insurer in respect of any information not so recorded, where the insurer claims that the proposer suppressed any material information or provided misleading or false information on any matter material to the grant of a cover. It means the insurance company has a duty to record all the information received even orally, which the agent has to keep in mind by way of follow-up. 2. Role of intermediary. The intermediary has a responsibility towards both parties, e insured and insurer. An agent or a broker, who acts as the intermediary between the insurance company and the insured, has the responsibility to ensure all material information about the risk is provided by the insured to insurer. IRDA regulation provides that intermediary has responsibility towards prospect. Duty of an intermediary towards prospect. IRDA regulation states that an insurer or its agent or other intermediary shall provide all material information in respect of a proposed cover to the prospect to enable the prospect to decide on the best cover that would be in his or her interest, where the prospect depends upon the advice of the insurer or his agent or an insurance intermediary. Such a person must advise the prospect dispassionately, where, for any reason, the proposal and other connected papers are not filled by the prospect. A certificate may be incorporated at the end of proposal form from the prospect that the contents of the form and documents have been fully explained to him and that has fully understood the significance of the proposal. Underwriting. We have seen that a completed proposal form broadly gives the following information: details of the insured, details of the subject matter, type of cover required, details of the physical features both positive and negative including type and quality of construction, age, presence of firefighting equipments, the type of security etc., previous history of insurance and loss. The insurer may also arrange for pre-inspection survey of the risk before acceptance, depending on the nature and value of the risk, based on the information available in the proposal and in the risk inspection report, additional questionnaire and other documents. The insurer takes the decision. The insurer then decides about the rate to be applied to the risk factor and calculates the premium based on various parameters, which is then conveyed to the insured. Proposals are processed by the insurer with speed and efficiency, and all decisions thereof are communicated by it in writing within a reasonable period. Underwriting. As per guideline, the company has to process the proposal within 15 days time. The agent is expected to keep track of this timeline, follow up internally and communicate with the prospect, insured as and when required by way of customer service. This entire process of scrutinizing the proposal and deciding about acceptance is known as underwriting.
Of insurance policy document. After underwriting is completed, it may take some time before the policy is issued. Pending the preparation of the policy or when the negotiations for insurance are in progress and it is necessary to provide cover on a provisional basis, or when the premises are being inspected for determining the actual rate applicable, a cover note is issued to confirm protection under the policy. It gives description of cover. Sometimes, insurers issue a letter confirming the provisional insurance cover instead of a cover note. Although the cover note is not stamped, the wording of the cover note makes it clear that it is subject to the usual terms and conditions of the insurer's policy for the class of insurance concerned. If the risk is governed by any warranties, then the cover note would state that the insurance is subject to such warranties. The cover note is also made subject to special clauses, if applicable, e.g. agreed bank clause, declaration clause etc. A cover note would incorporate the following: A. Name and address of insured. B. Sum insured C. Period of insurance D. Risk covered A. Rate and premium. If rate is not known, the provisional premium F. Description of the risk covered. For example, a fire cover note would indicate identification particulars of the building, its construction and occupancy. G. Serial number of the cover note. H. Date of issue. I. Validity of cover note is usually for a period of a fortnight and rarely up to 60 days. Cover notes are used predominantly in marine and motor classes of business. 1. Marine cover notes. These are normally issued when details required for the issue of policy such as name of the steamer, number of packages, or exact value etc. are not known. Even in respect of exports, a cover note may be issued, e.g. a certain quantity of cargo meant for shipment is sent by the exporter to the docks. It may happen that, owing to difficulty of securing adequate shipping space, shipment of the cargo by the intended vessel does not take place. The quantity, therefore, that may be sent by a particular vessel cannot be known. In the circumstances, a cover note may be required, which is to be followed subsequently by the issue of regular policy when full details are available and made known to the insurance company. Marine cover note may be worded along the following lines. I. Marine cover note number E. Date of issue E. Name of the insured IV. Valid up to is requested. You are hereby held covered subject to usual conditions of the company's policy to the extent of ours. A. Clauses. Institute cargo clauses A, B or C including war SRCC risks as per institute clauses, but subject to 7 days notice of cancellation. B. Conditions. Details of shipment to be supplied on receipt of shipping documents for issue of policy. In the event of loss or damage prior to declaration and/or shipment on board the steamer, it is hereby agreed that the basis of valuation shall be prime cost of the goods plus charges actually incurred and for which the assured is liable. With regard to inland transit, normally all relevant data required for issue of policy are available and therefore a cover note is rarely required. There may, however, be some occasions when cover notes are issued and substituted later on by policies containing full description of the cargo, transit etc. 2. Motor cover notes. These are to be issued in the form prescribed by the respective companies. The operative clause of a motor cover note may read as follows: the insured described in the form referred to below, having proposed for insurance in respect of the motor vehicles described therein and having paid the sum of Rs as premium, the risk is hereby held covered under the terms of the company's usual form of policy applicable thereto, subject to any special conditions mentioned below, unless the cover be terminated by the company by notice in writing, in which case the insurance will thereupon cease and a proportionate part of the premium otherwise payable for such insurance will be charged for the time the company had been on risk. The motor cover note generally contains the following particulars: A. Registration mark and number, or description of the vehicle's insured, cubic capacity, carrying capacity, make per year of manufacture, engine number, chassis number. B. Name and address of the insured. C. Effective date and time of commencement of insurance for the purpose of the Act. Time, date. D. Date of expiry of insurance. A. Persons or classes of persons entitled to drive. F. Limitations as to use. G. Additional risks, if any. The motor cover note incorporates a certificate to the effect that it is issued in accordance with the provisions of Chapters X and 11 of the Motor Vehicles Act, 1988. The validity of the cover note may be extended for a further period of 15 days at a time, but in no case the total period of validity may be extended for a further period of 15 days at a time, but in no case the total period of validity of a cover note shall exceed 2 months. Note: the wordings of the cover note may vary from insurer to insurer. Use of cover notes is being discouraged by most companies. Present-day technology facilitates issuance of policy document immediately. 3. Certificate of insurance. Motor insurance. A certificate of insurance provides existence of insurance in cases where proof may be required. For instance, in motor insurance, in addition to the policy, a certificate of insurance is issued as required by the Motor Vehicles Act. This certificate provides evidence of insurance to the police and registration authorities. A specimen certificate for private cars is reproduced below, showing salient features. Motor certificate of insurance is required to be carried in the vehicle at all times for the scrutiny of the relevant authorities. 4. Policy document. The policy is a formal document which provides an evidence of the contract of insurance. This document has to be stamped in accordance with the provisions of the Indian Stamp Act, 1899. A general insurance policy usually contains A. The names and address S of the insured and any other person having insurable interest in the subject matter. B. Full description of the property or interest insured. C. The location, S of the property or interest insured under the policy and where appropriate, with respective insured values. D. Period of insurance. A. Sums insured. F. Perils covered and exclusions. G. Any excess deductible applicable. H. Premium payable and where the premium is provisional subject to adjustment, the basis of adjustment of premium. I. Policy terms, conditions and warranties. J. Action to be taken by the insured upon occurrence of a contingency likely to give rise to a claim under the policy. K. The obligations of the insured in relation to the subject matter of insurance upon occurrence of an event giving rise to a claim and the rights of the insurer in the circumstances. L. Any special conditions. M. Provision for cancellation of the policy on grounds of misrepresentation, fraud, non-disclosure of material facts or non-cooperation of the insured. N. The address of the insurer to which all communications in respect of the policy should be sent. O. The details of the riders if any. P. Details of grievance redressal mechanism and address of ombudsman. Every insurer has to inform and keep the insured informed periodically on the requirements to be fulfilled by the insured regarding lodging of a claim arising in terms of the policy and the procedures to be followed by him to enable the insurer to settle. The practice of insurers to issue policies in a standard form, covering certain perils and excluding certain others. If certain terms and conditions of the policy need to be modified at the time of issuance, it is done by setting out the amendments, changes through a document called endorsement. It is attached to the policy and forms part of it. The policy and the endorsement together constitute the evidence of the contract. Endorsements may also be issued during the currency of the policy to record changes, amendments. Whenever material information changes, the insured has to advise the insurance company, who will take note of this and incorporate the same as part of the insurance contract through the endorsement. Endorsements normally required under a policy related to a. Variations, changes in sum insured. B. Change of insurable interest by way of sale, mortgage, etc. Extension of insurance to cover additional perils, extension of policy period. D. Change in risk, e.g. change of construction, or occupancy of the building in fire insurance. A. Transfer of property to another location. F. Cancellation of insurance. G. Change in name or address. Policies, contracts of insurance are expressed in writing and the insurance policy wordings are drafted by insurers. These policies have to be interpreted according to certain well-defined rules of construction or interpretation which have been established by various courts. The most important rule of construction is that the intention of the parties must prevail, and this intention is to be looked for in the policy itself. If the policy is issued in an ambiguous manner, it will be interpreted by the courts in favor of the insured and against the insurer on the general principle that the policy was drafted by the latter. Policy wordings are understood and interpreted as per the following rules. A. An express condition overrides an implied condition except where there is inconsistency in doing so. B. In the event of a contradiction in terms between the standard printed policy form and the typed or handwritten parts, the typed or handwritten part is deemed to express the intention of the parties in the particular contract, and their meaning will overrule those of the original printed words. C. If an endorsement contradicts other parts of the contract, the meaning of the endorsement will prevail as it is the later document. D. Clauses in italics override the ordinary printed wording where they are inconsistent. A. Clauses printed or typed in the margin of the policy are to be given more importance than the wording within the body of the policy. F. Clauses attached or pasted to the policy override both marginal clauses and the clauses in the body of the policy. G. Printed wording is overridden by typewritten wording or wording impressed by an inked rubber stamp. H. Handwriting takes precedence over typed or impressed wording. I. Finally, the ordinary rules of grammar and punctuation are applied if there is any ambiguity or lack of clarity. 1. Construction of policies and insurance policy as evidence of a commercial contract and the general rules of construction and interpretation adopted by courts apply to insurance contracts as in the case of other contracts. The principal rule of construction is that the intention of the parties of the contract must prevail. That intention must be gathered from the policy document itself and the proposal form, clauses, endorsements, warranties etc. attached to it and forming a part of the contract. 2. Meaning of wordings. The words used are to be construed in their ordinary and popular sense. The meaning to be used for words is the meaning that the ordinary man in the street would construe. Thus, fire means flame or actual burning. On the other hand, words which have a common business or trade meaning will be construed with that meaning unless the context of the sentence indicates otherwise. Where words are defined by statute, the meaning of that definition will be used, such as theft, as in the Indian Penal Code. Many words used in insurance policies have been the subject of previous legal decisions, and those decisions of a higher court will be binding on a lower court decision. Technical terms must always be given their technical meaning, unless there is an indication. Premium is the consideration or amount paid by the insured to the insurer for insuring the subject matter of insurance, under a contract of insurance. 3. Payment of premium in advance. Section 64 VB of Insurance Act, 1938. As per Insurance Act, premium is to be paid in advance, before the inception date of the insurance contract. This is an important provision, which ensures that only when the premium is received by the insurance company, a valid insurance contract can be completed and the risk can be assumed by the insurance company. This section is a special feature of non-life insurance industry in India. A. Section 64 VB of the Insurance Act 1938 provides that no insurer shall assume any risk unless and until the premium is received in advance or is guaranteed to be paid or a deposit is made in advance in the prescribed manner. B. Where an insurance agent collects a premium on a policy of insurance on behalf of an insurer, he shall deposit with or dispatch by post to the insurer the premium so collected in full without deduction of his commission within 24 hours of the collection, excluding bank and postal holidays. C. It is also provided that the risk may be assumed only from the date on which the premium has been paid in cash or by check. D. Where the premium is tendered by postal or money order or check sent by post, the risk may be assumed on the date on which the money order is booked or the check is posted, as the case may be. A. Any refund of premium which may become due to an insured on account of the cancellation of policy or alteration in its terms and conditions or otherwise, shall be paid by the insurer directly to the insured by a crossed or order check or by postal money order, and a proper receipt shall be obtained by the insurer from the insured, and such refund shall in no case be credited to the account of the agent. There are exceptions to the above pre-condition payment of premium, provided in the Insurance Rules 58 and 59. 4. Method of payment of premium. The premium to be paid by any person proposing to take an insurance policy or by the policyholder to an insurer may be made in any one or more of the following methods. A. Cash. B. Any recognized banking negotiable instrument such as checks, demand drafts, pay order, banker's checks drawn on any scheduled bank in India. C. Postal money order. D. Credit or debit cards. A. Bank guarantee or cash deposit. F. Internet. G. A. Transfer. H. Direct credits via standing instruction of proposer or the policyholder or the life insured through bank transfers. I. Any other method or payment as may be approved by the authority from time to time, as per IRDA regulations, in case the proposer policyholder opts for premium payment through net banking or credit debit card. The payment must be made only through net banking account or credit debit card issued on the name of such proposer. Most of the non-life insurance policies are insured on annual basis. Although there is no legal obligation on the part of insurers to advise the insured that his policy is due to expire on a particular date, yet as a matter of courtesy and healthy business practice, insurers issue a renewal notice in advance of the date of expiry, inviting renewal of the policy. The notice incorporates all the relevant particulars of the policy, such as sum insured, the annual premium, etc. It is also the practice to include a note advising the insured that he should intimate any material alterations in the risk. In motor renewal notice, for example, the insured's attention is to be drawn to revise the sum insured, i.e. the insured's declared value of the vehicle, in the light of current requirements. The insured's attention is also to be invited to the statutory provision that no risk can be assumed unless the premium is paid and used in an insurance contract to limit the liability of the insurer under a contract. Insurers incorporate appropriate warranties to reduce the hazard. With a warranty, one party to the insurance contract, the insured, undertakes certain obligations that need to be complied with in a certain period of time, and the liability of the insurer depends on the insured's compliance with these obligations. Warranties play an essential role in managing and improving the risk. A warranty is a condition expressly stated in the policy which has to be literally complied with for validity of the contract. Warranty is not a separate document. It is part of both cover notes and policy document. It is a condition precedent to the contract. It must be observed and complied with strictly and literally, irrespective of the fact whether it is material to the risk or not. If a warranty is breached, the policy becomes voidable at the option of the insurers, even when it is clearly established that the breach has not caused or contributed to a particular loss. However, in practice, if the breach of warranty is of a purely technical nature and does not, in any way, contribute to or aggravate the loss, losses can be treated as non-standard claims and settled. Insurers at their discretion may process the claims according to norms and guidelines as per company policy. 1. Fire insurance's warranties are as given below. Warranted, that no hazardous goods shall be stored in the insured premises during the currency of policy. Silent risk, warranted that no manufacturing activity is carried out in the insured premises for consecutive period of 30 days or more. Cigarette filter manufacturing, warranted that no solvents having flash point below 300 C are used, stored in the premises too. In marine insurance, a warranty is defined as follows: a promissory warranty, there is to say, a warranty by which the assured undertake that some particular thing shall or shall not be done, or that some condition will be fulfilled, or whereby he affirms or negatives the existence of a particular state of facts. In marine cargo insurance, a warranty is inserted to the effect that goods, e.g., are packed in tin-lined cases. In marine hull insurance, by inserting a warranty that the insured vessel will not navigate in a certain area, gives an idea to the insurer about the extent of risk he has agreed to provide cover for. If the warranty is breached, the risk agreed to initially is altered and the insurer is allowed to discharge himself from further liability from the date of breach. 3. In burglary insurance, it is warranted that the property is guarded by a watchman for 24 hours. The rates, terms and conditions of the policy continue to be the same only if the warranties attached to the policy are complied with.